All right, we're here today with my two favorite finance bros, Keller and Trip. How you guys doing?
Doing well. Thanks for having us.
Yeah, great. Happy to be here. Thanks, Ron.
Yeah, no, really glad to have you on Best of What's New. And I think set the record straight here about why we're having an aircraft financing business on Best of What's New. There's been a lot of changes, in the past several months, um, in the aircraft finance business, and that's why these guys are here to talk about it and all the latest and greatest stuff. So let's get down to it. Everybody's favorite topic, one that we've been talking about at length, kind of behind the scenes, is bonus depreciation. So why don't you guys start and tell us a little bit about that and how you expect that to impact the market?
Yeah, so Trip here, a little background from him, and Trip, feel free to take over, but he's got a heavy banking background, so I think I'll let you head that one off, Trip. You know a good bit about bonus depreciation and what's coming.
Yeah, so without getting too technical, we always recommend that you talk to your tax advisor about it. But depreciation generally would take any purchase and spread it over what we would call the useful life. Typically, it's 5 to 10 years for most assets, or even longer for residential or commercial properties. So when it comes to aircraft and the opportunity for bonus depreciation allows you to accelerate your expenses. So you're able to increase your expense load when you buy the asset, which means you have a lower net income and you pay lower taxes. Right now, bonus depreciation is about 40%. It's curtailing 20% every year. So next year it'll be at 20%. And then after that, it should go to zero. Last year, there was a bill that went into the House with the intent of returning bonus depreciation back to 100%, something that the Jobs Act did back in 2017. That bill did not go through, so it's not law, so don't get too excited. But Trump has talked about bringing it back and having it in full force, where it'd be 100%. Here at Firecrown specifically, we have a related party that has an aircraft, and we have it over 2 years for our own purposes. So it's not something that is a one size fits all. So you can take it and you may say, based on your earnings or your growth plans or your tax plans, that you want to accelerate all 100%. Or you may say, hey, I want to break it up. But at least you have the freedom to be able to do so.
Got it. So Keller, why don't you talk a little bit about how this is expected to impact, the aircraft financing market and what y'all are sort of hearing and expecting to see this year?
Yeah, so I think one of the biggest things we're going to see is this: if this 100% bonus depreciation comes back, the market is going to become very hot. We're going to see airplanes not sticking on the market nearly as long, mainly kind of going towards the turboprop and jet crowd. Those airplanes are probably going to have a price increase. So I've been recommending to people who are in the market right now looking at buying an aircraft to go ahead and get the process started now, because eventually inventory is going to drop. We're going to go back into a seller's market where they're going to be less likely to negotiate sales prices, and also be less likely to budge on timelines and things like that. So my biggest recommendation for those who are in the market right now: go ahead and get the financing started. We're honestly seeing great rates right now, anywhere between the 6.5, 7% range for some of those turboprop and jet people. So it really all boils down to what's going to happen with inventory, if 100% bonus depreciation comes back. So it's better to be on the top side of that curve rather than the bottom side and having to fight for the deal that you need.
Got it. So it's almost like we planned this. You had a great segue. Let's talk about interest rates. Obviously it doesn't just extend to aircraft. It's a big topic in real estate these days. It's very volatile, hot topic. What are you all sort of hearing and seeing this year, and expecting from the Fed?
Yeah, so 2025 has been actually relatively stable. We've seen a slight rate decrease. So right now, as I kind of said, our average rates are between 6.5, 7.5%. And then, of course, if we get into some charter use and things like that, it could rise slightly by about a point, but nothing too significant. My projections for the remainder of 2025 really is just going to kind of, I think we're gonna stay kind of where we're at. We might see a slight decrease in the coming months, but again, I don't have that crystal ball. So as much as I wish I did, and how helpful it would be for our clients, I can't say for sure. Um, but we're finally seeing some stability in the market. We're not having rapid increases or decreases like what we saw in 2024 with decreases, and then in 2023 we saw, I mean, just it was monthly increases on rates, which is really exciting for us because we're able to provide more accurate quotes, which last longer times before they expire. Because before this, we were giving out quotes that had to have 30-day expirations, and now we're providing 90-day expirations. So it's you know, again, it's hard to say without a crystal ball what's going to happen, but I think we're in a really good spot looking ahead 2025 and beyond through the remaining years, to come. I think we're finally seeing some stability again.
Got it. So Trip, I think this is actually, I should have led with this because I think it's really valuable for the aviation community. 'Cause a lot of us, frankly, us laymen that don't work in finance or banking don't really understand the whole interest rate process and how the Fed sets it in its entirety. So can you give the 30,000 foot, so to speak, overview of how that works and, any chatter from the banking side about what could change in the overall economy this year?
Sure, happy to. So, bankers generally act collectively, and they don't act fast, and they're normally not known for being on the forefront of really anything. If you think about the last time you went into a bank, you probably had to fill out a deposit slip that looked the same as it did 30 years ago. So, as banks look at rates, at the federal level, they're looking at a lot of different data, and you have everything from how would a rate shift affect currency, which, a stronger dollar is great if you're a tourist trying to go, overseas, but it's painful if you are an exporter because you're trying to sell and you're hoping to pick up on that currency lift. So they're looking at currency, they're looking at what's happening in the housing market, what's happening in oil prices and inflation and everything that we've talked about. And so right now there's so many questions that it's just sort of a hold steady moment. There's the potential that the current tariffs and trade war just eases out, the art of the deal sort of scenario. So that eases out, and you have the economy take a breath and get back to business as usual. And at that point, the Fed is able to focus primarily on controlling inflation, and there's less concern outside of that. There are also other scenarios where the Fed has to be more proactive, and then also the risk of stagflation. And so all of those, from a very high level, generally result in the Fed waiting longer than people would normally prefer them to do.
Got it.
Hey,
So you'll
Ryan,
worry. Go
if
ahead.
I
Go ahead.
could butt in on this too, because I know we talked about, Trip, you had a great example there that it takes time. So a lot of people will see a Fed decrease, on the rate, and immediately my phone will start ringing and say, Keller, what are your rates down to now? Now that the Fed has decreased the rates. And it's not something, these banks don't change them, immediately overnight when the Fed drops their rate. So it usually takes about a 4-week period after there's a significant rate drop for the banks to kind of follow suit. So the best thing, I always tell people is just stay patient for a little bit. Give us about 4 weeks. Let's see what happens, and we'll continue the process. After we hear some news and figure out what exactly the banks are going to do with their lending rates.
That's right. And if you wanted to see a more timely indicator than looking at the Fed rate, you might look at the 5-year Treasury rate, because that's typically what bankers will price on when they're doing a fixed rate loan, like a mortgage or an auto loan, or in this case, an aircraft loan. So that, if you looked at it, it changes regularly. You're able to see the trends of where that's going, and it'll react usually before we hear anything from Chairman Powell.
Got it. Uh, are you all worried about any softness in the aircraft financing market because of tariffs?
Tariffs, loaded question there.
Yeah, I like
It's
load.
it's interesting. So the used market is not going to be nearly as affected by these tariffs because the airplanes a lot of times are already in the United States. Now, granted, if you're buying a used 210 or PC-12 or something that's overseas, okay, yeah, it's a different story. Tariffs could affect the sales price, importation tax, and everything there. But as far as the used aircraft market goes, we're not going to see anything incredible. Now, what you need to keep your eye on though is parts. A lot of these parts that starters and alternators and all these pieces of the airplane that are commonly to go out, those, depending on where they're coming from, could see an increase in pricing. So it's something that when you are buying an airplane, keep that in the back of your head, but don't let it stop you from a purchase. Because overall, it's still, if you're buying an airplane, you need the airplane, or you just want the airplane. But it's definitely something you need to keep your eye on, is look at what parts are commonly failing, go ahead and kind of prepare for an increase of those parts, and just build it into your budget. And of course, at Flying Finance, we're happy to talk with you guys about budgeting and what we can do to help too. So it's, like I said, tariffs. All right, new airplanes coming in from overseas. Yeah, it's going to be interesting to see what happens. We really don't know yet.
So, have you heard any chatter from anybody in your spheres or any clients expressing some concern over these?
Yeah, so we've had some clients that have put purchases on pause right now, but they've immediately come back and came back and started to do the deal again. And it's all because, they get this really anxious, anxiety feeling, and then they realize, you know what, I need to go ahead and buy now. Before these tariffs, really if they get enacted, we need to go ahead and have the airplane imported or exported to wherever they are. Again, we deal with clients in, Canada, Mexico, all over the place. So we have these conversations daily. So if you're on the fence right now about buying an airplane and you're worried about tariffs, go ahead, pull the trigger, get an application in. Let's get it closed, sealed, signed on the dotted line, so that we can avoid any of those extra fees that might come with it. But as far as friends in the industry, everybody's a little anxious. It's a whole new ball game as far as what we're looking at with pricing. You look at pipistrelles, you look at technums, they all come in from overseas. So these new shipments, expect some changes. But again, don't get too nervous until things actually come to fruition and we actually see some changes happening.
Got it. Yeah, it's an interesting time in the industry. I just feel like I've heard the word tariff way too many times this week. Just it affects everything from parts across all spaces, commercial down to pistons and even home builds. So it'll be
Yep.
interesting. Um, I want to ask you, because this always blows my mind, is that I think when people think of flying finance, the first thing comes to their mind are, I'm, a billionaire going to finance my Gulfstream or my new G800, which was just certified today. Um, Tell me really who your clients are and what value you guys add for them.
We do all walks of clients. Our minimum loan amount is $20,000. We do deals well above that into the multi-millions of dollars, $20 million, $30 million. But really, our most acted deal on is usually that piston market in the $250,000 to $700,000 range. We really, I'm a little biased on that crowd because I'm a pilot myself. I was a flight instructor. I flew for charter operators. I flew for the airlines, and I really love the piston market. So it's something that I hold near and dear to my heart as far as helping those clients get financing, because there's a lot of companies out there that have $100,000 loan minimums, and we want to open the market up so that anybody and everybody that we talk to, we can get a loan done. So that includes your $20,000 home builds all the way up to your multi-million-dollar Gulfstream. Hey, G8 Gulfstream 800, yeah, would love to do it. So we really don't have a very narrow, like, this is exactly who we finance. We do a very broad spectrum, and you can see on our Facebook page that we have Flying Finance Facebook page. We love the piston crowd. We do a lot of piston aircraft. So I don't want people to think that we're just after, jets and turboprops. While we love doing those deals and we're happy to help and talk to the CEOs and CFOs that need those aircraft, we also really enjoy helping those owner-flown aircraft as well.
There's the U.S. government is currently auctioning off 10 KC-10s. The starting bid is $500,000. You want to go in on it with me, Keller?
Yeah, let's do it. Let's just throw down that money and buy those airplanes, and we'll figure out who can fly them.
Yeah, they do not come with the refueling boom attached, though. That's the only.
Oh, well, I'm out.
Yeah,
That's the
that
kicker
did,
for me.
yeah, yeah. That did it for me too. So let's talk about. Obviously, I don't expect you guys to get down into the weeds about who your clients are, but I think there's a lot of people would be curious. What's the demographic of people going out, and working with you all? The key demographic.
Yeah, so you have everything from individuals who are pre-retirees or retirees that their grandfather had a plane, their father had a plane, and now they want a Cessna 172 or something like that. You also have high wage earners and company owners who are buying aircraft to get from one property to another, or on the private equity side, from one portfolio company to the other. So it's a pretty wide range. We will see everything from student pilots to people buying their third, fourth, and fifth plane. And sometimes you'll see that elevation from a single piston to multi-engine and all the way up into the jet market.
I think one really cool story too that we had recently was a guy was buying an aircraft. Sorry, I can't remember the make and model, but he had actually previously owned that airplane about 10 to 15 years ago. So he sold it to a gentleman, ended up about 10 to 15 years later. Guy still had it. He reached out to him and he bought that same airplane back, which is really cool. I love having, stories like that, airplanes with history. So, yep.
That's really cool. That's really cool. It's an airline move there. Lease the airplane and then buy it back.
Exactly.
Cool. Well, if somebody wants to chat with you guys, what do they need to do?
Yeah, so they can go online to our website, flyingfinance.com. We have a friendly little contact us button on the right where they can fill out some information. Either myself or Kimsey or even Trip sometimes will get on the phones. We'll reach out to you guys. You can reach us at email, info@flyingfinance.com. We keep that email pretty clear and ready to answer any of your questions you have.
Got it. All righty, guys. Well, thanks for coming on and sharing about the latest and greatest in the aircraft finance space.
Thanks for having us.
Yeah, thanks so much, Ryan. We appreciate it.
Thanks for watching. Stay tuned for more Best of What's New.